Welcome back, everyone. This is NYU Grads Daily Podcast, recording on Sunday afternoon. Hope you are having a great weekend or had a great weekend if you're listening to this on Monday. We're going to cover Friday session, Jackson Hole, Jerome Powell, and what he said, as well as what kind of stood out on the Friday session. So let's jump right into it. When we take a look at the breadth numbers, it's not going to tell the whole story, but let's go over them. We had 51 new highs, 285 new lows, yet the NASDAQ or NQ was up 1%. So we still had more lows than new highs. Advanced declines, we had roughly 58% advancing and 35% declining, and 71% of shares on the Amex NYSE and the NASDAQ all below the 71, all below the 50-day moving average. Repeat, 71% of shares are still under the 50-day moving average. So that's not good. Let's take a look at complexion here a little bit. Everyone was waiting pretty much for the 10:05 Eastern Time speech by Jerome. Jackson Hole pretty much was sold off right after he finished speaking, but we did rally while he was doing his speech, and then once he was done, markets sold off. I do want to reiterate, after the news was sold off, it did rally back, and we closed near the highs for the day, and I'll cover that in a second. But the consensus on Bloomberg and CNBC and media was that Jerome Powell did not say anything new, which I would agree with, but I think it was more hawkish than I've heard in a while, because he did mention that multiple times that we'd have to stay at higher rates for longer. There's no discussion of cutting rates, and there's still a potential for raising rates again. So I thought it was more hawkish than anything, but I was kind of godsmacked when he said out of his own mouth, we are navigating under the stars in cloudy conditions. I don't know if he's just trying to be poetic or if that's like his inner author coming out, but you don't want to hear that from the most powerful organization in the world, who controls the U.S. dollar. That they're kind of navigating semi-blind here under cloudy conditions. They should have the most fidelity of anyone. They have data from every single potential data source that you could ever imagine. So I thought that was kind of funny that they said that. Another thing that stuck out on the Friday session, NVDA still closed down 2.4%, despite arguably one of the most bullish earnings releases I've seen in a long time. After the lunch break, I noticed, as I mentioned earlier, that there was a strong bounce in the afternoon, and NVIDIA was in anger all day despite the bullish action in the NASDAQ and the semiconductors. I've scanned, hundreds of charts between Friday and Sunday, and a lot of stocks are basically dead cat bouncing, trying to bounce up to the 50-day moving average, and that's all that's really going on here. I think the verdict is still out. We still need a few sessions and a few cards to come out of the deck. I'll post some of the intraday charts of Jerome Powell's speech, where it started and where prices were, and where the speech ended, and then where prices were after that. A couple things that hit the news flow that really caught my eye. VinFast Auto, the company that IPO'd through SPAC like a week ago, and 99% of all the shares are owned by one Taiwanese or Vietnamese, CEO. It's just all over the map. It's up 17%, down 70%, up 40%. That's not investing. That's literally gambling. I generally if anyone asks, because some people have asked me, like I would not touch it myself, and I would actually urge everyone who listens to stay away from things like that, because you can really lose a lot of money. The other one that really caught my eye was better.com. They're a mortgage slash housing finance company. Their claim to fame was, I think, in 2021 during the COVID shutdown. The CEO went on a Zoom call and just laid everybody off very flippantly, and that got a lot of press. So you may have heard of better.com from that. But they went IPO through a SPAC this week. And once that IPO'd, it shot up to like $17. But the short version of this, pun intended, is that it went down to $1.20. So it lost like 90% plus of its value in a day. I really don't understand how regulators are allowing SPACs to come out. I feel like maybe I should look for some shell companies that are already public and SPAC NYU grad Substack and just IPO it, because it just is. I think it's really laughable that this is allowed to happen. If you got caught up in this and you bought it at $17, you're at $1.20 right now in a day. So again, I urge you guys to stay away from SPACs. It's just not worth it. There's plenty of good companies out there that you can build a great portfolio and long-term strategy, or even swing trade, right? This is not even trading. This is literally lottery ticket buying and hoping for the best. Other things that stuck out to me. So Airbnb and just short-term rentals right now is under attack by multiple cities, whether you're looking at cities and states like Texas, Florida, Arizona, Las Vegas, New York. They're cramping down and starting to go after short-term rental owners and these companies like VRBO and Airbnb. New York, they were already cracking down. Airbnb and 3 other short-term rental owners fought back against the ruling, and the rebuttal basically was thrown out by the court, so it's going to stand, and now they're going to go after short-term rental owners in New York, and it's happening slowly across the country. So I would watch Airbnb's stock. I think Airbnb, if this accelerates in the backdrop of a downfall in housing and the lowest mortgage applications since like 1995 or something like that, we may have some problems. I also saw coming across the wire that Zillow Homes, their division of home loans, is now offering a 1% down payment option for home buyers. You don't even have to be a new home buyer or first time home buyer, but in Arizona only for now. So Arizona is one of those areas where there's a ton of new construction spec homes that are shadow inventory that's just sitting there. So Zillow Homes, I think, is trying to take advantage of this, working with new home construction companies and offering this 1% down payment option. And if it's successful, they're probably going to try to release this in other cities and states. So these are not, new bull market news flows. These are end of bull market news flows, right? Like, if you're looking to buy a home, you should not be doing a 1% down. That is just the ghost of 2007 all over again. Around 2:30, we were almost approaching the high of the end of the Jerome Powell speech, so we were trying to rally back up to that Jackson Hole high for the day. We never got there, but we were close. So that's telling as well that although the market was up and closed 247 on the Dow and closed up 1% on the NASDAQ, we were never able to get back to the Jackson Hole high for intraday. But we did close near the highs, all right? Better than closing near the lows. So that's kind of the market session on Friday in a nutshell. What was strong on Friday? You had Affirm, which is the buy now, pay later company. They were up 28% on earnings. Carvana was also up 9% on the day. Workday was up 5%. What was weak during the session? We had NVIDIA, as I mentioned, they were down 2.4%. Extreme Networks was down quite a bit. I think, as I mentioned on Substack, that they needed a pullback because they've been on a tear, but they closed down 9.14%. It's still in a very bullish pattern here. I think as long as it stays above 20, it has a shot to create a new base or a new value range, and then we'll see what happens. But if you don't have a position in Extreme Networks, I would refrain from buying a new position, if depending where you got in, right? Like, so I had a few lots that I got in like right around the $10 range, as well as like the like $16-17 range. So I'm still holding on to those, but if it breaks anywhere below $21, I'm probably going to let go of them. But I would wait, if you don't have a position in Extreme Networks, to see if they can carve out a new balance area and try to play the extremes of those balance areas. But that kind of was, I mean, there's a lot more. Like, I don't want to cover this in a short podcast. When I have the premium set up, I'll have like a bullpen, bear candidates, as well as other charts that you can see on my private watch list. But that's kind of a quick summary of what stuck out. Just before we wrap up, I did want to mention, I did post this on Substack, but it's just a reminder. Melody Wright on Substack wrote an epic article on the state of housing. She does a lot of on-the-ground reporting, and I think she's doing a big one in Miami or in Florida. But she literally goes on the ground in like Texas and Las Vegas and Arizona, and gives like an on-the-ground report of some of these spec homes and shadow inventory. I highly recommend that you read that. I'll repost the link on the show notes. I think another thing to watch next week is going to be the Magnificent Seven. Where Apple goes, everybody goes. Apple is still trading under the 50-day moving average. When I look at the momentum indicators like Stochastics RSI, it looks like the selling may continue. So watch the Magnificent Seven. I'll throw out two freebies on my bearish candidate list. One is CrowdStrike. I think CrowdStrike looks very toppy here, and if it breaks this horizontal line of roughly $140, it's gonna really accelerate to the downside. And then another one is Shopify. They're already down quite a bit, but it looks like it's forming a inverse cup and handle, and it's so big that the measured move is below zero. Obviously, I don't think Shopify is going to go out of business, but it looks pretty bearish here, and I'll post both of those charts. It's on my Substack notes. If you don't follow me on Substack notes, please do. That's where all my intraday short form ideas and analysis live. And the regular Substack posts that you get by email are long form or my podcasts. Another thing before I wrap up, I mentioned earlier the mortgage applications plummeted to levels not seen since 1995. So this is a combination of demand being low, but also inventory being low. I think this is going to start to rear its head the back half of the year, because the selling peak season of home demand has passed, which is like the spring and summer months. Once kids go to school, it gets cold, holidays are here, people usually don't move. So I think it's going to be kind of a standstill, and people who sell are going to really have to drop their price. I also posted a screenshot of an email offer I got from Toll Brothers. There's all of these offers from Lennar, Toll Brothers, Pulte, D.R. Horton, but like Toll Brothers is one of the luxury home builders for tract homes, and they're offering 5.55 APRs for 30-year fixed. So if you have, Toll Brothers usually specializes in 1 million plus homes, $1 million plus priced homes. So if you have a luxury home for sale near Toll Brothers, how are you going to compete, right? You can't sell a comparable square footage home with same amenities and features as Toll Brothers because they're offering a 5.55 rate. If a home buyer buys from you, they're going to have to pay a 7.5% rate. So the only option you have is to lower your price so that the buyer's mortgage payment is going to be equal to buying from Toll Brothers at 5.55%. So that is also another reason why no one's selling, right? Because the new builders have the market all to themselves. And if you're an existing home buyer, not only do you have to fight the new home builder, you also have to go buy somewhere else at 7.5%. That's the gridlock that is happening in the real estate market. So with that, I will wrap up. And I hope you have a great day. I'll see you on the next podcast.